Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily briefing for Wednesday the 22nd of the 9th 2021. Time is 0440 GMT. Asian session coming to close, European session firing up, our lunchtime North American session. Right, yesterday, Tuesday the 21st, then we had a positive unopposed driver in the yen at plus 71, no backdoor flows, the opposing negative flows mainly coming out the euro at minus 35, out the dollar at minus 22, and the pound was a negative rock at minus 14, activity plus or minus 71. Over the week then, this is from Monday the 20th open to about 15 minutes ago, we've got a positive opposed driver in the yen at plus 308, front and backdoor flows mainly coming out the pound at minus 299, out the euro at minus 45, and the dollar was the positive rock at plus 36, activity plus or minus 344. So right, you can see that we basically had a peak in yen strength yesterday, as it was the unopposed positive driver. Over the week, the yen is still positively driving, but it's the opposed, and it's opposed by the dollar. And the main loser has been, over the week, it's been the pound, and yet over yesterday, the main loser was the euro, so that's something to bear in mind. Intra-week then, this is the Asian session to about 15 minutes ago. We've got a negative unopposed driver in the yen, minus 62, so this is further sort of, the yen's dropping down the gears, it's now in reverse, so we've got no backdoor flows, and the opposing positive flows going into the pound at plus 28, and the dollar and the euro were joint positive rock and positive movers at plus 17 apiece. Activity plus or minus 62. Right, we'll leave it there and write up the flows. Right, we've written up the flows then. So the euro is weak except against the yen and the Swiss. The yen is weak across the board. The pound is strong except against the CAD, the AUD and the NZD, the commodity currencies. The Swiss is weak except against the yen. The CAD is strong except against the AUD. The AUD is strong across the board. NZD is strong except against the AUD and the CAD. And the dollar is weak except against the yen and the euro. So what have we got? We've got yen weakness across the board in the Asian session, and we've got AUD strength, and we've got strength in the commodity currencies, CAD, AUD, NZD. And take your pick in the middle there. So right, what's going to knock it about, or has knocked it about? Well, we've had the JPY Bank of Japan rates decision. No change, except they basically assessed that their economic indicators are deteriorating. So that's something to bear in mind. We've got the FOMC minutes and rates decision today, later on today, about 7 o'clock this evening, which is going to dominate today's trading. Tomorrow, Thursday the 23rd, we've got Swiss rates decision and the Bank of England rates decision and the CAD retail sales. And Friday the 24th, last day of the week, we've got a light day today. Right, so we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index basically bounced right up. It's come back. It's 0.20 from the high, 20% off the modelled high. Still high, but come back. Gold has had a bounce off this retreat in the dollar, 0.45 from the floor though, so it's still below half marks. Oil is 0.33 from the high, so it's a third off the modelled high. Wall Street, S&P and tech, they've all got this, they had this big thump down and they've recovered to a certain extent. Wall Street is 0.35 off the floor, S&P 0.42 off the floor, and tech is doing better, it's 0.36 off the high. US 10-year and the bund, the European equivalent, so this is the price. So the US 10-year 0.42 from the floor, so the price went down, yields went up, and we just had a so it's below half mark, so yields are relatively strong in the US, and a similar situation in the bund, 0.40 from the floor, below half mark. So the yields are relatively strong, but not that strong. Copper had a pretty big sell-off with the equity sell-off. It's now bounced. It's 0.248 off the floor. Big pump up overnight Asian session. So maybe it's a precursor to risk on after the Fed. Who knows? Anyone will think about that. US steel on the deck. Back at the lows. So right, we'll get rid of that and then we'll make the final decision. So we had a little go at fading the bounce in what was it, the pound yen yesterday. So we sold the pound yen into its recovery, and that proved quite profitable for us yesterday, as we suggested. But anyway, that it wasn't necessarily an easy trade because you had to decide where the peak was, but anyway, we managed it. Right, so what we got then? So we've got the dollar, the euro, the yen, and the pound. We just had the yen rates decision, pretty neutral. We've got the FOMC Fed rates decision, and we've got the Bank of England tomorrow. So rates decision, and that's tomorrow. So that's going out on the horizon. So the market is positioned. If you look at the Asian flows, we've got reversals in this risk off flows. We've got risk on style flows in the Asian session. We've got a weak yen, strong commodity currencies, and we've got what is it? Yes, a weak yen and the AUD is driving the commodity currencies in that respect. So you've got this and you've got this bouncing copper, and it's all starting to look like, you know, a bit of a recovery as we head into the Fed. But, and it's a big but, you don't want to start buying risk assets today, particularly just yet, because there's going to be a lot of people who have been caught long and had a pasting, and they're going to be getting out as the market rises and selling in order to do that. So it's going to be very choppy. As soon as the market starts rallying, it's going to get whacked back down, in our opinion. So that's where we are. We're gonna, and also the market isn't going to want to wander too far away from base camp up running into the Fed, in case there's a positioning issue with what they say. So that's where we are. So we think the market's going to get this sort of chop back down to base camp. So watch out for any risk on sort of rises, because they will be sold off pretty harshly, in our opinion. So we're going to probably just stay chill out on the beach first day of autumn, and keep the powder dry for tomorrow. But it's entirely up to you. That's what we think is going to happen, and good luck with your trading. Thank you for watching.